GDP is typically soft. Winter weather and post-holiday savings often to blame. Here to explain more and whether we should be concerned by these numbers is Chris Lowe, Chief Economist with FTN Financial. Chris, welcome back to Rise Xchange, as always.
Yeah, good to be here, Andrew.
The headlines all over the morning news today was about how poor this GDP number was. Virtually no growth in the economy.
Well, that's right. 0.2% growth, and all of it inventories. If inventories hadn't contributed 0.7, final demand fell 0.5%.
And
right?
And the thing about inventories is that's businesses stocking up on products they think they're going to sell.
Or businesses stocking up on products they can't sell, which I think there's more of this quarter, just judging from what orders have done the last 6 months and judging from some of the things they've said in their own quarterly financial statements. You look at the actual measures of demand. Consumption growth was about half what it was last quarter. Business investment fell. Housing investment was barely positive. Government investment fell. And net exports were pretty ugly, too.
Yeah, so why the drive down on consumption, and specifically? What kept consumers from buying?
I think that's the biggest mystery, because income growth was decent. People suddenly saved a lot of money. And there's a couple of things we can point to. Record snowfall in New England is one. There also was...
But there's always snowfall every single first quarter.
No, exactly.
It's always snow somewhere.
And these data they're seasonally adjusted. They're supposed to take that into account. I think the other thing, though, that's happening that you don't hear the Fed talk about too much, that you don't hear economists talk about too much, is there is a recession in the oil industry.
Well, absolutely. The energy sector is getting hammered.
Right. So 100,000 jobs cut just in oil and gas alone. And then you look at businesses that supply them. Caterpillar, for example, already has cut 3,000 jobs. Their strongest sales in the first quarter was in energy and transportation. They warned both of those are going to be disappointing later this year because those businesses aren't doing so well.
We had a similar situation last year with the first quarter very weak. Janet Yellen says this is, quote, transitory. Do you believe it is? Do you think we're going to see improvements in the second and third?
Well, there is this weird thing that economists are calling it basically seasonal residual effects. In other words, look at the last 5 years. 3 times in those 5 years, first quarter was really weak. The other two, it was okay. I think what it is that the government has imposed tax increases, regulatory changes, and so on. It usually comes in the first quarter, and that's where those weak
so
years are.
The businesses are grappling with a new regulatory environment, new tax policy.
Absolutely. And consumers, too. But that didn't happen this year.
Right.
I think this year it's mostly the strong dollar, and the dollar has given up a bit this month.
And that did cause a trade imbalance,
strong.
and that is significant to the GDP.
Oh, it hammered exports.
Yeah.
Absolutely hammered.
Let me ask you about the Fed. They didn't raise interest rates. Where are we going on interest rates? They're not looking at the calendar now. They've taken that out of reference. They're no longer looking at unemployment numbers. The wage growth they're not really looking at. I don't know what they're looking at.
Well, they are. They're looking at the labor markets in general. And according to them, those are tightening up. Everything else is transitory, whether it's the dollar, slow growth abroad, obviously the weather, the port slowdown, all that stuff is transitory. The falling unemployment rate is not. And even though the unemployment rate didn't fall in the first quarter, the Fed says, well, that's transitory too. So they are determined to tighten this year. They are convinced growth is going to come back quickly.
But they may wait till the second quarter.
I think they'll probably wait until September. I don't think, that June is too soon. We're only going to have another month's data, and we're coming off real weakness here.
Chris Lowe, as always, thank you so much.
My pleasure, Andrew.